Hello, ladies and gentlemen. This is Dr. Greg McLeod here from Elite Traders University, and it's time again for Bulls versus Bears, the weekly Forex forecast. So good to be with you here on this Saturday morning, and we're going to look at the upcoming week and see what's going on in the Forex market. We'll look at what's going on economically, and we'll also look at the technicals that are behind that are underpinning the economic data. Okay. It's end of the week. It's last week in September, and it's hard to believe that September is gone already. And we moving into one of my favorite months, October, right? So let's go ahead and I'll share my screen, and we can go ahead and get going. Let me go ahead and make sure we save it, and we're going to get welcome to Bulls versus Bears, and we are going to get down to the share my screen. We can do that. I know we can. We're going to share screen one. How about that? We're going to share screen one and share. All right. Again, welcome to Bulls versus Bears. So good to be with your weekly Forex forecast. Yeah, my name is Dr. Greg McLeod. It's my great pleasure to have you aboard and give you some insights into how I'm looking at the market. I've been doing this for close to 30 years. And so it was my great joy is to be able to share this information with you. And so let me go ahead and let's get into our risk disclaimer on our screen. Make sure you understand all the risks associated with foreign exchange trading. And again, my name is Dr. Greg McLeod. I'm the founder and CEO of the Elite Traders University. And I've been doing this for almost close to 30 years. I trade everything from options, stocks, crypto, commodities, and of course, currencies. I'm one of the foremost authorities in short-term day trading called scalping. And I've spent nearly a decade working at one of the largest Forex broker dealers in the world. And also, I've created the Trend Spotter indicator dashboard for locating currency strength. And I've also written many articles that are still being used for educating traders around the world. And so let's go ahead and get started. We're going to be looking at the currencies, the majors, the S&P 500, gold. One of my favorite things to trade. If you've seen one of my videos, did 1.1 million trading gold this week. When the currencies are kind of wonky, with the interest rate announcement and stuff like that, gold was very good for us. And you can go ahead and click the link inside our description if you would like to have professional mentorship and coaching and training to learn how to become a professional trader in 90 days using our proprietary method that has been making my clients millions of dollars for many years. And I'm making it available for a limited time only. So make sure you book your spot, talk to one of our success coaches, or you can actually, if you want to sample our program, we have a special 6-week boot camp, which you can have access to on one of our best performing systems and be trained by me for 6 weeks. And the whole goal of that is to get you started, get you success, and then help you make enough money where you could actually afford mentorship and working more closely with me on my more advanced systems for 12 months. So make sure you take advantage of that limited time opportunity to get roughly 25% off of that boot camp, the Forex Foundation's Power Trade Boot Camp. Okay, let's go ahead and get to the charts, right? Now we're going to look at the economic calendar. How about that? The economic calendar. I'm going to find the economic calendar on My Market Heat Map. My Market Heat Map is one of my favorite tools to use. You can go to www.mymarketheatmap.com to learn more. It's a full-featured trade scanner. It tells you what's hopping, what's popping, what's dropping, what's not in the market. Green is an uptrend, red's in a downtrend, and gray is stay away. And you can actually access one of the heat maps that are usually working during normal market hours. The tiles will either flash green, meaning that the currency pair is an uptrend, or flash red when they're meaning the currency pairs are trading a downtrend. And they'll stay gray if it's to stay away because it's moving in a sideways market. And our best opportunities are going to be when we're trending up or trending down. And so this is a wonderful tool to help you save time instead of looking at 10, 20, 30 different charts in different time frames. A simple, easy to use dashboard right here. My market heat map is the tool preferred by professional traders around the world. Okay, so let's get into the economic calendar, which is found under tools. Go to tools, economic calendar. And this is like a Swiss Army knife for traders, all kinds of tools, Forex calculators and market news streams and scanners, all located at your fingertips right here for one low monthly price. Okay, let's look at Monday, 4 a.m. We have the Eurozone business climate supposed to rise, or actually drop from 85.7 to 85.2. You can see the flag. I call it fund with flags instead of fun with flags. If you're a Big Bang Theory, you know, the internet show that Sheldon and Amy created called Fun with Flags. I call this fund with flags. We get funds by trading. So here's a German flag that Germany's in the Eurozone. So we would look to trade the euro, and the euro will get some volatility. News is like the rock that hits the water. It creates ripples, it creates waves, and causes currencies to move. It creates the action, the volatility that we need in the market. And so that's why we're looking at the news, so we can know what to trade, because these flags are going to tell us what other people, what the big hedge funds, institutions, and big banks and and companies I used to work at. This is what we consulted every Monday morning. We consulted the economic calendar so to know how to position ourselves and position our clients in the market going forward. So let's go ahead and go to Tuesday. And I'm looking at high impact items. There's a lot of other news too, but there's low impact items, which are yellow or maybe orange, medium impact or orange. Low impact items are yellow. We're focusing on the red ones because those provide the most impact. And we want to trade things that are moving, which are interesting, which are impactful, which have a story. And the story behind here is IFO business climate. That's going to be the big story. It's going to push the euro, and we want to look at positioning ourselves in it. We don't get any more news until Tuesday, the 26th, 10 a.m. news cycle. We're going to have the Conference Board consumer confidence. It's supposed to fall from 106.1 to 105.6. Rising prices, inflation, and higher fuel costs are causing people to lose confidence, and that could impact the U.S. dollar, right? Bad news is good news. So if we see bad news, it could actually be harmful for the U.S. dollar and beneficial for the euro. Okay, 9:30 p.m. We're going to have the Australian dollar news, or Australian news that will impact the Australian dollar. We have the monthly CPI indicator. CPI stands for Consumer Price Index, and it's another gauge of inflation. And we're looking for it to rise from 4.9% to 5.2%. And so that we're looking at the Australian dollar to move on that. On Wednesday, September 27th at 2 a.m., we're going to have more German data in the Eurozone. This will impact the euro. We have the GfK consumer confidence. It's also remained unchanged at negative 25.5. Pretty interesting how big that negative number is. Thursday, we have some more news. We have inflation rate year on year from Germany. Supposed to actually drop from 6.1% to 4.66%. Remember, these are year on year numbers. We're comparing the last year to the previous year. So the year on year number is supposed to come down pretty strongly. 8:30 a.m. This starts our traditional U.S. news cycle. U.S. news has two cycles, an 8:30 a.m. news cycle and a 10 a.m. news cycle. 8:30 a.m. is just an hour before the New York Open. We're going to have the core PCE prices quarter on quarter final. It's supposed to drop from 4.9% to 3.7% as higher interest rates from the Fed have put a damper on core PCE prices. This is when they talk about core, they mean without food and energy in there, right? So We also have GDP growth rate quarter-on-quarter final, supposed to actually rise from 2 to 2.2%. And then we have the GDP price index quarter-on-quarter final, supposed to drop from 4.1% to 2%. And so we're seeing the impact of those Fed rate hikes. Initial jobless claims, very important thing that the Fed is watching. And those jobless claims are supposed to rise from 201 to 217. And that should give the Fed a reason to maybe pause the rates. They did pause this time, but they were hawkish, saying that they could hike more in November and December meeting. They could hike, but they did pause for the month of September. September 20th, we had the rate announcement from the Fed, and that they decided to give it a pause, to skip a rate hike, which was widely expected. At 4 p.m., we have Fed Chair Powell is going to be speaking, and 4 p.m. is kind of late to be trading, and we would be out of the market. However, it may impact Asia trading. At Friday, 2:45 a.m., we have a French flag. They're also in the Eurozone, one of the largest economies in the Eurozone. They're going to have their inflation rate year on year, the preliminary number, supposed to have risen from 4.9% to 5%. And then we're also going to have the Italian inflation rate year on year, supposed to have dropped from 5.4% to 5.3%. And then we are going to have the Eurozone inflation data for the whole, with inflation rate month on month, supposed to have risen from 0.5% to 0.7%. And then we have the inflation rate year on year. The flash is supposed to have dropped from 5.2 to 4.5%. And you're going to find a difference in inflation rates between the month, comparing month to the previous month versus year to the previous year. And then we're going to have core inflation rate year on year. Flash is supposed to have dropped from 5.3% to 4.8%. And CPI flash, consumer price index flash number is supposed to come in higher from 124.03 to 124.9. And then we move on to 8:30 a.m. for our 8:30 news cycle. And that will be the last one for September. This Friday is the last trading day. And personal income month on month is supposed to have risen from 0.2% to 0.4%, as a tight labor market has forced employers to raise salaries. And the Fed looks at that as inflationary. But if you can't find enough workers, it's about supply and demand. You need a higher demand than higher price. Okay, and then we're gonna have personal spending month on month, and that's supposed to have dropped from 0.8% to 0.5%. Higher prices has also caused consumers to pull back on their spending. Core PCE price index month on month is supposed to have remain unchanged at 0.2%, and the core PCE price index year on year supposed to have dropped from 4.2% to 3.9%. So we're going to look the U.S. dollar. If we want to trade U.S. dollar news, we usually like looking at the euro. The euro is considered the anti-dollar, and it's most sensitive and most reactionary toward U.S. news. Okay. Also in that 8:30 news cycle, Canada jumps in with GDP, gross domestic product month on month. That's supposed to have actually dropped from 0 to negative 0.1. And we also have Canada GDP month on month is supposed to have risen from negative 0.2 to 0.1%. On the back of higher oil, Canada is one of the largest suppliers of oil to the world. And with oil touching the $90 area, that's showing some short-term growth kick to the GDP. Then our 10 a.m. news cycle finishes off with the Michigan Consumer Sentiment Final from 69.5%, supposed to have dropped to 67.7%. Again, consumer sentiment, if prices of fuel, prices of food, prices of energy, prices for rent and housing are all high, and job layoffs, that's going to contribute to a a sour consumer mood and the drop in consumer sentiment. Okay, and that could be construed as as bearish for the dollar. As the Fed might say, hey, people are feeling bad. We don't have to hike rates anymore. But if people feel good, we might have to keep hiking, right? 9:30 p.m. Hopefully no one is trading 9:30 on a Friday, but if you just happen to want to look at the market, the China is coming off the MBS manufacturing PMI. It's supposed to have risen from 49.7 to 50.4. Says, well, Greg, we don't even trade Chinese currency. And you may be saying, but Australia and New Zealand are the large trade with China, and the China is their largest trading partner. So any news impacting the Chinese economy is going to directly impact Australia and New Zealand. So it may not, they are having their news late during the US trading. I mean, we're in the evening, right? We're in the weekend, basically. We could see a carryover, a spillover effect for the Australian dollar that following Monday going into October, right? Okay, so that's that is all the economic data. Again, we have some mostly going to be euro is going to be in play coming up, right? And we had some, we had our UK data already, 23rd. Yep, right here. Okay, so let's go ahead and take a look at some charts, right? And let's see if we got some charts there. All right. Coming up here, and we go ahead and all right. Let's go ahead and go our clean chart here. Okay, there we go. And so we're going to have our chart. Template 1020 clean. Okay. All right. So I'm going to use Heikin-Ashi candles, and I'm going to go ahead and I'm using Trading View to go through our charts. We really start the DXY, and I'm actually going to switch to a single chart so we get the big 50,000 foot view, starting off with a monthly chart. And we're going to go to the DXY. DXY is the US dollar index, and it is we're looking at the dollar. We can see that the dollar has been trending higher after a pullback, which we had. And that pullback ended with a hammer on July 3rd, 2023. And now we've been moving on up like George and Wheezy. We have this steepening uptrend here. So we've been very bullish the US dollar. And see, once you understand that the US dollar is in uptrend, then the other currencies are pretty much trending down with some rallies in between. The weekly chart also shows and again, Heikin-Ashi candles basically take the average, the high, low, and close open of the previous day, and average those moves out. So it really gets rid of the fake outs and the different types of candlestick patterns. It should be more of a distraction than a help. I just keep it really simple. Green is an uptrend, and we can see that we've been uptrending on the DXY daily chart. We have some pullbacks, but overall the trend is up, and so we would look for buy entries. And we've been going up for the last 3 days, so we might be poised for some type of a pullback. We're also at the end of the month. September and beginning of October are usually pretty bad history in the stock market for logging big declines over the years. 1929 crash and some other crashes, historical crashes here. But bulls versus bears, I am bullish the US dollar, probably bullish until the end of October. It's definitely a seasonal thing that happens. And sure enough, the dollar has risen 6 years out of 6 during September, and that's exactly what it did. Okay, so let's go and go to the euro, EUR, USD, and that is the anti-dollar. We can see lower swing highs and lower swing lows. Look at this. Now we had a rally, and then we got as high as 22 112.77. That high we hit again on July 3rd, the 4th of July, Independence Day, and then everything started turning around. So we got this bearish move down on the monthly chart after a trend line break and color change, and we look for prices to continue to maybe pull back down on this. We can take a Fibonacci on this monthly chart here, doing like a Drake song from the bottom to the top, and now we're here, and now we're here. Okay, okay. We remove all drawings. Okay, let me start that again. A clean chart, and we can see that price came down to that 38% retracement. Got a little bit of a pullback there. Maybe come back down to the 50 or 618. 618 comes in at 101.0212. And we could probably see a pushback there. This is a monthly chart. Let's go ahead and drop down to a weekly chart, and you can see long lines of candles. We might get some type of a pullback. We're at the 38% retracement. That's that orange line. We may see some type of a bounce there, but it may only be very short-lived. Let's drop down to a daily chart, and you can see that we are trying to find a hammer, a bottom out with multiple hammers on this on that 38% retracement. But I'm thinking that as long as we're below these moving averages, we can continue down. 4-hour chart, we might get a little bit of a rally and maybe give us something we can short high. So I'm actually short-term bullish, like maybe a day or two bullish, but I think we resume the bearish trend, and we can see prices actually break that 38% retracement and hit toward the 50, go to the 50 back, and it'll be right in line with seasonal patterns and all that stuff. So I see some type of a little bit small rally. You can either scalp that or wait till it finishes and then take it on down. Wait for that elevator to come up so you can take it back down. Okay. So bulls versus bears, I'm bearish the euro. Okay, let's go ahead and go to GBP USD. I don't think we saw any data on that, so I'm just going to go ahead and go through it really quickly. And I'm going to move all drawings there, and we can actually see same kind of pattern where we had a rally. I call it the King Charles rally. King Charles is coronated, and we hit that rally, and now we're moving on down. Right, we can see price dropping, trend line break. Very significant break as the U.S. The dollar continues to get stronger. Remember, we're trading GBP versus USD. USD is the same as DXY. DXY is a basket of currencies versus the US dollar. And we can see that the dollar's strength is going to drive down. It'll drive down the pound, right? And so let's go ahead and move on over to I want to show you guys this. We were trading gold the other day. We were just kind of crushing that gold trade. We had some losers there, but it was like the spread widened out, so we got like 7 pip loss, right? But then we just came back and just crushed it. It was like pretty cool. Just want to show you that the platform is going down for maintenance. So I want to get that in there, guys, for the gold trade. I think I'm only going to jump over to gold, and I'm going to quote platforms going down for maintenance for the weekend. Okay, let's go XAU USD. I'll show you we've been flipping gold. I have a mastermind with about 5 or 6 people that I trade with that they're my high ticket clients that invested in trading with me for 2 hours a day for 3 days a week. For a year, it's like 20 grand, but I really undercharged, but it's a lot of fun, and we use different another strategy as well. And we've been trading gold, and gold has been showing some really awesome trades on this gold trade. So we had something that looks like a triple top, but it looks like it's getting ready to flag out and move higher. So bulls versus bears, I'm looking at the gold to continue up. We found like this double bottom in this uptrend, and so I'm looking for maybe gold, getting back to the 1950 area. We have this upper trend line that we're following. We might move sideways for a bit on gold, because of the dollar strength, because it is dollar versus but the dollar usually weakens at the end of October, beginning of November. And if that is that carries through, then we could see an upward move in the gold. So I'm short term or medium term bearish, but longer term bullish on gold. Right. I just wanted to pop that in there. And we were just trading that little range up in here. Right. Okay. So I just showed the gold, and we do have oh yeah, the euro, EUR/USD. Did we do the euro? Yeah, I thought we did. Yeah. Yeah, the euro we're moved down. Japanese yen, the dollar yen, just want to give a little bit of a nod to that. This is fantastic, this uptrend. Remove all drawings, higher highs and higher lows. This is our monthly chart, and it looks like we're going to retest that 151 area. That 151, I'm going to move myself out of the way. 151.90, and we're at 148. And so that's about 300 pips. So we still got some bulls versus bears. I am bullish the dollar yen. Dollar is very, very strong versus the Japanese yen. And so we get this tremendous rally. And people are like saying, oh, the yen is getting strong. And they're going to, well, there you go. That's all you got. You got one big pullback. And after that, boom. All right. So I mean, you get some dips, and it's been like buy the dips. Anytime we get a drop, we drop, we don't stop. We just keep going, right? Okay. Let's take a look at AUD USD. And let's go back to our monthly chart there. And you can see that it's just really sad. I mean, it's like not sad if you're a bull. If you're a bull, you're like, yeah, you're high pawing yourself, looking for. So hey, like counting how many caves you can buy, or some nuts and berries, or like how much honey you're gonna get. It's if you're a bull, you're not happy. But if you're it has this kind of like it's drooping. It can't really get out of its own way. We have a long wick down here, spike down the low from COVID. COVID low was like around the 54.89 area. And we've just been barely hanging on. The 65 areas was spiking. But I think that, we get some lower highs. We have a lower low. We need another lower low. So we'll probably see a test, Aussie dollar test of the 64.39 area. And, but it looks like, it's like trying to get a little life, trying to go up. But every high is making lower highs. When we hit that high at 68, and we just couldn't come back to that area. The bulls versus bears, I'm actually short-term bullish, like maybe bullish for a day, but then we we need to break 63.56, which it's held up for like a couple of months. And I think people are just kind of waiting on the Chinese to save their commercial real estate market with some type of big bazooka bailout plan. And if that does, then that's going to shoot Aussie up. But I don't think China's going to do anything like that until the stock markets and things are seasonally adjusted to go north. They can put a lot of stuff. They can put the tailwind of the stock market rally, the Santa Claus Christmas rally, to actually fuel this breakout. So they might just hold, we might stay in a holding pattern until, basing until we get that breakout. So I'm more medium term neutral. We're just probably just play the range. We get to 63, 66. You want to be able to look at buying, and then we get back up toward the 65 area. I would look at selling. Again, there's not recommendations, just looking at technicals and providing education and entertainment. And if we find it educationally entertaining, okay, fantastic. Let's go ahead and move on to. I'm going to go to another thing that we've been trading a lot is NQ or NAS 100. Very fast moves. You don't need very much because it's, and you can see that we've been kind of we topped out at that 15,921. Maybe we have some support coming in. Let me get back to our monthly chart. We're still hanging around, but this is kind of an inside day. We would call this our inside month. We're in the range of the previous candle, which usually is bearish. But we're still riding the uptrend. We're still green and we're above the moving averages. So we might move sideways for a bit before we ascend these highs toward that 167.24 area. Weekly chart, though, you look at it, we're topping out. We haven't broken this trend line. I mean, the trend line is not drawn very well. You want to connect the swing lows, and we really haven't broken that. And that's what I was going to teach on this topic this week on trend, how to draw trend lines. But I didn't. I had some technical difficulty, so we'll resume. We're going to do live stream on YouTube on Thursdays, back to our time, our regular time. Again, my apologies for not being on. Okay. Fantastic. NASDAQ 100 sideways consolidation, and I think we'll hold out. I don't think we're going to get a massive drop. Moving to a daily. I mean, we've got support coming in at this 14,556, and that could hold if it gives a double bottom. It could just bounce around here for a while, but that area is coming in. So we might be short-term bearish, medium-term bullish, but I don't think we get much of a breakout until we get into middle October. Okay. And we get the SPX 500. You can see that we've already did that. Will we break this on the monthly chart? We have this inverted head and shoulders, and we still haven't. No, we're still bullish. We're riding the trend line. I don't think we'll do anything crazy like breaking the trend line and coming that way, which we could. It's just that there's a lot of we haven't broken trend line. We're still above moving averages. We're holding within a range box. So I look at a weekly. We can see that we've got maybe a double bottom here. We could see the S&P 500 bounce from this area and keep going, or it might give us one shot back down to the trend line, right? Still, it's tradable for a short, but I would rather see it, kind of rally up, get some type of a bounce, some type of rally against the trend if we're taking it short. But I think that we'll see a bullish move in the S&P 500. Moving right along to Bitcoin, BTC, USD. Remember, the key part in anything is USD. We're all trading our dollars for S&P. We're trading our dollars for NASDAQ. We're trading our dollars for gold. We're trading our dollars for euro. We're trading our dollars for something. If dollar keeps going up because of interest rates, then everything else sinks, right? So even BTC. Now, what's interesting about BTC is that even though the dollar has been increasing in value, that BTC has been holding very stable, holding this 26,555, that area for several hours. And actually, we actually had turning up a little bit, right? Weekly chart, monthly chart, right? Monthly chart rolling over a little bit, but if we want to take this trend line across there, and we still have this rising trend line we just broke by about 2 candles. Let's see what happens in the next. We're the next month is coming up, right? The October, so we'll get a new candle lit. Looking at this looks slightly bullish, right? We have an uptrend, and so whether slightly bullish or moving sideways, we're in a sideways consolidation with higher. We have some higher highs, same low, almost a double bottom. We can see a breakout from this area, come back to that 3206 area. Okay. So I am actually short-term, medium-term bullish. I think, we get some type of a bull run in middle October, more like November. But remember, the Fed says they're going to keep hiking rates, and they probably won't stop till March. So that's really kind of interesting to look at too. Okay. So that is it. We've covered the currencies, we covered the economic news, and I hope you found this useful and interesting, helpful in your trading. Okay, come on. I'm going to take you to our website, Elite Traders University. If we can get there, yeah. And leave site. And stop by Elite Traders University for our free income boost blueprint, or our free master class, 4 pillars to 6 figures. Shows you how I do it and how I've helped people, and also an opportunity for you to work with me. But if you want to get started right away, get a sampling of our course and how it can generate more wins and help you become more consistent. Consistency is very important. If you can't trust your system, I know I saw someone's posting and they're saying, you don't have to be 100% right. You don't have to be 90% right. It would help though, right? To be right 9 out of 10 times instead of 4 out of 10 times. It's really hard. If you knew, we deal with politicians. If you knew a politician that was right, that was telling the truth 50% of the time, you could trust them a little bit, right? Or if someone is right, maybe like 8 times out, if they're going to watch your dog, but 8 times out of 10, they lose your dog. You don't trust them with your dog, right? And so how are you going to trust your money to your system if you can't trust it at least 50% or 60% or 70%? No, mathematically, if you risk 2% and you can lose, if you lose, 2% on your trades and you're right 30% of the time, you could still make money in the market, theoretically. Psychologically, can you trust something that screws you 7 out of 10 times? Nowhere on this planet, if, even 3 strikes and you're out when you're playing baseball, right? But the whole idea is that, you should have a system that you can trust. And most of the time I've talked to my students or potential students, their biggest problem is a lack of consistency. So they tell you, look, listen to what they're saying. You don't have to be right all the time to make money in the market. Oh, but I'm not consistent in the market. But you don't have to be right all the time, but I'm not consistent in the market. So what is it? What is true? What is true? Is consistency. People want consistency, but all the talking heads and gurus and trading books tell you that don't worry about consistency. You can still make money losing 6 trades out of 10, and you only need to be right 4. Oh, that's so comforting. I don't trust my system as it is. I lose 6 trades in a row. I'm not going to give it another shot. Okay. I'm not going to give it a seventh shot at losing my money. Right. So you can trust me, but you lost me money one time. Okay. Here, you give your money to someone and they lose the money again. Oh, sorry. Hey, it's only 2 times. Okay. 3 times, 4 times, 5 times, 6 times, 7th time. They make all the money back and they make some more. Oh, wow. You're such a great person. I gave you money 7 times. 6 times you lost money, and the 7th time made it all back and a little bit more. I really believe in you. How's that sound, guys? Is that some effed up logic or what? What you want is a system that's reliable, that it will give you winners 9 out of 10 times, 10 out of 10 times. Why? No, mathematically, you don't need to win, but psychologically, if I win 10 out of 10, I'm not going nuts, right? I'm not, well, just trust your system. Trust your system. It's lost me 6 times. I've lost 6 out of 10. I've lost 6 out of 10. You want me to trust something that I've lost 6 out of 10? Oh, don't worry, you win 4 and you risk 2%. No. I want to win all the time. I want to win. Who wants to win? Let me know in the chat box if you want to win. You don't go to the Super Bowl winning 6 games out of 18 or 12 or how many ever they play. You have to have a GPA. You have to have a win percentage, right? And my students at Elite Traders University, that's what we do. Okay. And they can do what I do. They can win. I have a record in my brokerage. I won 402 trades in a row without a loss. And I train my students how to do that. If you're interested in that, it may not be for you. If you want to lose 6 trades out of 10 and win on 4, risking 2%, if that's what you want to do, if that's the paradigm you want to believe in, go for it. There's plenty of guys out there. But if you want something better, if you want better results, winning results, then you want to click the link and you want to purchase a course and just get started, or you just want to be a loser, and that's fine, right? Because psychologically, you can't handle it. You will lose 6 trades and you'll say, oh, this doesn't work, or oh, I'm doing something wrong, or oh, I need some help. But if you hit the button and you hit this over and over again, there is no question. Your subconscious, conscious, whatever intuitive mind is going to say, green is good. Green is good. The system works. I have confidence. I have confidence. I've been using the system for 20 years, 25 years, right? I've been using the system for, almost a quarter, probably longer than people have been alive, right? But if you want that other stuff, you will believe the other stuff. If you don't believe that you can do it, then you can't. You can't do it. So don't even bother to sign up. All right, I'm out.